For each version of the payroll project, your first task will be to complete the employee gross pay worksheet. For the first pay period, October 15th on the 3-month project or December 15th on the 1-month project, you will have to calculate the employee's hourly rate or period wage to 5 decimal places. In addition, you will need to determine their regular and overtime pay when applicable. For later pay periods, you will not need to recalculate the rate since those can be used in future periods. For this example, we are going to focus on 2 employees. We first must look at their pay information, and this can be found in the project. We are going to focus on their salary and whether they are exempt or non-exempt. The 2 employees we are focusing on is Anthony Chinson, who earns $48,000 per year plus commission, and the commissions will be given to you per pay period, and Anthony is an exempt worker. The second employee we are going to focus on is Leonard Hyssop. Leonard earns $51,500 per year and is non-exempt. To review this concept, exempt employees receive their pay regardless on the number of hours it takes for them to complete the job. A non-exempt employee will receive their normal salary plus may receive overtime at a rate of 1.5 times their normal hourly rate. To find a period wage for a salaried individual, such as Chinson, we are going to take their salary and we are going to divide it by the number of pay periods. As a semi-monthly payor, Wayland will have 24 pay periods, giving Chinson $2,000 per pay period that he will earn. For Hyssop, the salary is $51,500, and this time we will divide by 2080, which is 52 weeks a year times 40 hours per week that are standardly worked for the company, giving Hyssop an hourly rate of $24.75962 rounded to 5 decimal points. In the event that Hyssop earns overtime, we will take the 24.75962 and multiply it by 1.5 for an overtime rate of 37.13943. Coming back down to the October 15th payroll, we determined that Chinson will have a period wage of $2,000, and that will be regular pay. And you see that his commission this pay period is $1,500. For Hyssop, we see that he worked in excess of the 88 hours that are regular for this pay period. We have an hourly rate of $24.75962, and multiplying 24.75962 times the 88, that is regular hours, we have regular pay of $2,178.85. And now we can calculate his overtime. We have 93.25 hours that Hyssop worked. We subtract out the 88 that was standard for this pay period, and that gives us 5 hours and a quarter. We multiply that by his overtime rate, which was 37.13943, for a total overtime wages of $194.98.